Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So this is exactly what I thought would happen today. Just kidding. So market certainly surprising a lot of people, myself included, and my heart goes out to feeling the frustration for swing traders because, man, this is not a swing trader or an investor's market right now. And again, it's why I love being all cash. And until we see some notable dollar weakness, cash will continue to be my safe haven and allow me to just start the day with a fresh, clean slate. Because again, this is the last thing that I would have expected as far as today's price action to open red yesterday, short squeeze to plus 2%, and then go down 3% today is astounding. But that's where we stand, and we closed weak, so the bears certainly still have momentum. CNBC pushing the fear narrative, inverse yield curves, all that stuff all day today. This daily candlestick, that upper wick is a fluke. High of the day was right about here, 288.74. And we are looking right back down at the lows. So every individual name is looking at the lows of August. The names that have broken the lows of August already are certainly weaker than names that have not. But like I said yesterday, the fact that some of these individual sectors, IWM, already breaking to lower lows increases the odds that SPY and other names can as well. So looking at it longer term weekly time frame, as I've been saying, if we're going to see notable weakness on the weekly time frame, it would be a head and shoulders pattern with our left shoulder, our head, right shoulder, and then a loss of the uptrend. And this is the kind of scenario where you could make the argument either way, depending on what kind of technical analyst you are. But you could say that is our right shoulder. As we found our support, we attempted to head back to the all-time high and rejected back down towards lower lows. Or you could say that wasn't a significant enough pivot point and we're still looking for a weekly higher low compared to 273.09. For me, all I care about in the short term is if we break 281.72, which odds favor at this point after today, then it's definitely a notable shift on the daily time frame, and we could be in for further weakness from here. Short-term time frame, RSI, we had a bounce attempt at the end of the day at 285.99. What's notable for today, on a day like today, is the 5-minute downtrend being extremely clear in the sense that there were no fake outs or anything. We had the start to the day, hit the high of the day, low of the day, lower high, lower low, lower high, lower low. That 5-minute downtrend kept up pretty much the entire day. Even this big bounce never saw the higher low and higher high follow through. And that's what kept the bears in full control. But what stands out the most to me, which tells me it's more automated, systemic selling or done by bots in a way that is intentionally not flushing things, is the RSI. If you tell me we go down 3% in a day, but the 5-minute RSI never goes below 27, that shows me it's contained and sustained selling. Because every time we got close to 5-minute oversold, we got a tiny little weak bounce, and that did allow bulls to get some little bounces mixed in there today. But the 5-minute RSI not getting crushed tells me a bit more sustained selling as opposed to get me out of here, flush market sell, RSI's collapse, V-shaped recovery kind of dump. So IWM broke to the lower low, 146.21 broke. So the next support level is 145.32. The low of June, end of May, start of June, is the most important support level for names that break their low of August. Because if we break that level, it's a very clear weekly lower high and lower low, shifting momentum back. And if we look at it on the monthly time frame for a bit of a bigger picture, that little monthly higher low is on the verge of breaking, and then we're looking back down at the September dump low on IWM. So IWM is the lead bear to the downside out of these major sectors and markets that we're looking at. And on the hourly time frame here, I would say anything under 147.13 is just a lower high. So heading into tomorrow, hourly lower high is the most important level for me, because any kind of bounce that we see, then I'll just say any bounce under this level keeps the bears in full control. QQQ One of the stronger sectors still has a bit of space to work with, another $4, $3.50 before we break the low of August support. If that level breaks, the low of June is the next key support level. And on the hourly time frame, our resistance short term, 183.89. Anything under that keeps the bears in full control. XLF already broke to a lower low. So we had those names yesterday where we said these names are weaker. IWM, XLF were two of them. They broke into those lower lows. Looking at the financial sector on the weekly chart, 25.92, low of June is the next key support level. And I would say losing that level is losing the weekly uptrend. So still just barely holding, but we're on the verge of breaking the weekly higher low pattern that's been in play since the December dump low. XLV, still holding 88.19, the low of August. If that level breaks, low of June, couple support levels in there, but 86.77, the next support level. So as of right now, SPY is still holding August low. Tech sector QQQ is holding, XLV is holding, but obviously the bulls don't have favor with where we currently stand, and the fact that we closed at the low of the day is going to allow that fear narrative to continue to be spun all after hours. XBI 80.45 support still holding, but we're heading down to that level. After 80.45 is 79.31. We've been watching this 10-month equilibrium, and oil is in the same pattern, which we'll look at very shortly. If we break 79.31, it's a bear break. If we hold it, it's just another higher low staying in this pattern. Very important level. The VIX with a big turnaround day. Looking back up at the recent high of 24.80. And what's notable for me is I look on the weekly time frame and say, okay, the big moves that we've seen, very short-lived. 2-week spike, 2-week spike. This one lasted about 5 weeks, and then we got another little 5 weeks of follow-through. So we're on our fourth, actually we'll call it our third week. Definitely can see more follow-through if the S&P 500 rolls over and this fear narrative continues. Gold, daily inside bar. So tightening range after the volatility yesterday. I'm watching the 4-hour chart, and it looks like an equilibrium is coming with our high of yesterday, low of yesterday, lower high. And now if we keep pulling back here, we're going to look for a higher low compared to 14.79. Silver, pretty much the same pattern. Looks like our lower high may be set at 17.30, and we'll look for a higher low. There's a support at 16.85, but 16.51 is the most important support. And there's a gold support at 14.94, but 14.79 is the most important support for me. So tightening ranges after the inside bar could stay within that inside bar heading into the start of tomorrow. And again, these miners, the last 3 days, it has become very clear that the correlation importance shifted from miners are going to do what gold is doing to miners are going to do what SPY is doing. So obviously we didn't see an all-out dump, but we closed at the low of the day. And the fact that gold did not close anywhere near the low of the day, it definitely stands out. So NUGT also still in the tightening range. We've got our high of yesterday, low of yesterday, lower high. 33.27 is the must-hold level to try and see this equilibrium continue to hold. And maybe we'll get a play off of 33.27 support tomorrow to see if we can stay in that tightening range. So oil pulling back today, not surprising, correlated with the S&P 500, got overextended yesterday, but it's all about the weekly chart, because if we are going to see this market weakness and recession and that narrative keep playing out, we will need to see this 10-month oil equilibrium break bearish, which it certainly could. We're currently 10% above support, a little bit less than that, 9%. So we could pull back 5% more and still be in this pattern for oil. So again, I don't think we're going to see a break of this pattern for at least a week, but it's something to be watching, because if that breaks bearish, it's only going to be another stone, another weight that you put on the side of the bear's scale as to where we're headed. Natural gas, weak bounce attempt, anything under 234, just a daily lower high. I will be interested in natural gas if you give me a higher low on the daily and a tightening equilibrium range. And if that equilibrium range were to break bullish, I may be interested in that. if I'm going to be looking to play natural gas, I'm probably going to have to get into futures trading, which I haven't done at this point because I have way more to trade than I need with the cryptocurrency 24/7 market and stocks. But the reason I would want to be playing this through futures is to be in control when market hours are closed and natural gas is still trading. Otherwise, I'm just doing myself a disservice by putting myself at unnecessary disadvantage. So all that being said, bears have complete control, a little bit lower after hours here, not very notable. How we open tomorrow will dictate a lot, but again, what stood out to me today, which didn't have me looking to buy dips too aggressively, I did play a couple flips because I like oversold bounces, and they did work out for some little wins, but the RSI, 4-hour RSI not being close to oversold yet, and the daily RSI not being close to oversold told me we can very easily stay weak all day today. And the hourly RSI, that one little candle, cooled off the RSI back to 30, opening up the door for another leg down. So if you remember the video that I put out August 5th, where I was talking about how it was reminding me of the low in December and how I was looking for a bounce and all that stuff, it was because the daily RSI was oversold and the 4-hour RSI was oversold. So the fact that neither of those are the case right now, it's not nearly the same situation. So we'll check back in maybe tomorrow. Things are going to be a bit sparse. Going to break up my routine as far as daily videos. We've got a member meetup this weekend. 50 chart gals and girls coming into town. Going to have a bunch of campers here. So I'm going to be busy the next couple of days. I'll do what I can, but not going to have the same amount of videos the next couple days into the weekend as usual. So hope you had a good day. Hope it wasn't too brutal. Certainly want to be hedging against long-term portfolios. At this point, I don't have a long-term portfolio. I don't trust the government. I don't trust our financial systems. So that's not my style. I'm going to sit cash until the dollar tells me that I shouldn't be doing that anymore. But if you have a long-term portfolio, certainly not a bad idea to have some kind of protection. And there's many different ways to do that, whether it's through options or ETFs. If there's leveraged ETFs, you don't want to be holding it for years because time decay is certainly a factor, but that's that. Do good things, have a good night, end it with some more Iceland, and we'll maybe see you tomorrow.